Hi, friends. Professor Joe here. I hope you all are doing great. Now, I have over 10 years of trading experience, especially in the Forex markets. All these videos that I'm creating is out of my own experience and learnings. I've done a lot of mistakes and I've learned from them. In today's video, we are going to discuss a special strategy, which is called as a breakout strategy. And we'll be discussing about that one trade that made over $1 billion. Yes, one trade that made $1 billion. So let's see how it was done. There you go, friends. This is that trade that made $1 billion. GBP euro in 1992, 1993. If you see the fall, this is what George Soros did. Yes, this trade is the historic trade, which is called as the Black Wednesday, which actually crippled the Bank of England. And this trade was executed by George Soros. We will have a look at how George Soros executed this trade, and then we will understand what is a breakout trade. George Soros, some of them consider him as one of the greatest traders, and some of them consider him as evil. It's because whenever he enters the trade, he actually cripples the economy. But he makes a lot of money for his investors. These are some of the things that he noticed before entering this Black Wednesday trade. There were multiple factors that affected this move. Economic conditions. He saw weakness in the economy, the inflation rate, the interest rate, GDP, and unemployment rate. ERM, that is the European Exchange Rate Mechanism. The exchange rate between GBP and the other European currencies were being managed by the government. Market sentiments were against Great Britain pound because of the euro settlement. Central bank intervention, particularly the Bank of England, artificially trying to keep the prices high. And when George Soros saw all these situations, he entered the market with a sell. He had his own funds, but at the same time, he has a group of investors who invest once he instructs them to do so. They did the same. And that is how the market collapsed. And more than $1 billion were earned by George Soros in this particular trade. Now, this trade is similar to a breakout trade. Let us see what are the similarities if you would be a technical analyst and you would identify this trade. Like you can see on the chart, this is how a technical analyst would have a look at this particular chart. You can very clearly see that there was a support zone that was broken. And then there was a candlestick pattern which retraced back to the previous support, which now had become a resistance. And then the market fell down from there. And you can see the fall of the market. Now, as a technical analyst or as a person who looks at charts and trades, what are the things that you have to look for a breakout trade? Let us look at those. Number one, you have to see that a very, very important support zone has been broken. And sometimes it might get converted into a resistance, but for a very, very quick time. Okay, so it will break the support. It will just retest that zone once again. Now it has become the new resistance zone, and then the prices will fall down from there. You will also see a very, very strong bearish candle once at the break of the support, second at the retest of the new resistance zone. The stochastics or the RSI will have crossed the 50% mark because remember, this is not a pullback trade. This is a breakout trade. So you will see that the stochastics and the RSI must have crossed the 50% mark and should be on its lower side. Volumes will be very, very high when a breakout trade happens. Always backtest and see historical data where at this particular area, if there has been a breakout. If there has been a breakout, very good. If not, just be a bit careful. Now remember, every time I say this, that there is no strategy which is 100% foolproof. So a trade can go wrong even at the best given situations. So you have to be careful. So risk management plays a very, very important role. Like I always say, maximum 2% or come down to 1% or maybe even 0.5% infusion in one particular trade. For stop loss, use the ATR or the resistance zone in a bearish trade. If it's a bullish trade, then look at the support zone. Very, very simple. Okay, just make sure that you're giving enough space when you're putting a stop loss, because sometimes the markets move up and down. And if your stop loss is too close, it will just trigger your stop loss before it moves in your direction. So keep enough space for your stop loss. Now let us revisit the chart once more and see how a breakout trade looks. Number one, the breakout of a good support zone. Number two, a good candlestick pattern. Number three, wonderful volume. Number four, you will see the stochastics or the RSI is below the 50% mark. When you see all these things, look into your risk management, depending on how much you can infuse, but not more than 2% for one particular trade. Enter the markets. Remember, you should be safe in the market and trade, because if you stay longer in the markets, you will surely win in coming times. In summary, what we have seen in this video, we have seen how George Soros entered the market while he entered for the Black Wednesday trade, and how he made more than $1 billion in one particular trade. Second, we checked what are the conditions for a breakout trade. Next, we checked what is the risk management you should consider by entering into a breakout trade. And finally, friends, trading is all about practice, patience, and persistence. All these three things are equally important when it comes to trading. You need to give your time for trading. And remember, in trading, learn to take small losses, because if you survive in the market, you will earn big profits in the markets. See how simple it is. If you identify how to enter the market and if you have a plan, trading is very, very, very simple. Now, I have written a book called Traders You Can Win, but First Learn to Lose. This book clearly tells that learn to take small losses, because if you're wrong, you are wrong. Don't try to make it right. And then enter the market with a strategy. In this book, I have explained two strategies, that is the pullback strategy and the breakout strategy, with the details. So if you're a new trader or a bit confused trader, you can buy this book from Amazon. It's available in Kindle and you can go through it. It will surely help you improve your trading. If you love the content that I'm creating, please like and share these videos. So there are a lot of traders who are out there who still need a lot of help with trading. And for more such videos on trading, finance, banking, investment banking, kindly subscribe to my channel. This way, every time I make a new video, you will get the first update. And friends, all I can say is keep learning, keep growing. Thank you. Namaskar.